Traders are closely watching the oil market. Crude oil prices tend to reflect the escalations and de-escalations of tensions in the Middle East. We have Jared Levy, the Chief Market Strategist at Peak American Financial Group, standing by. Hello, Jared. Let's get your trader talk. What's your take on oil prices and Middle East tensions?
A lot of tension. I realize that. And a lot of that tension has been obviously priced into the net price of crude oil. One of the things I'm noticing is that, crude up here around, $80 a barrel, somewhere in there, $83 a barrel is, it's kind of in line with a lot of what people are expecting. And I'm taking a little bit of a contrarian view today because, I'm starting to look at, again, industrial production. I'm looking at China's sort of soft recovery, spotty recovery. I'm looking at air travel earnings. I'm looking at the consumer. And again, this is just one of those things where if you've got a bullish portfolio overall and you want to layer in some hedges, I'm bearish on oil. I don't think it's going to zero. I don't think it's going to 50. But I think up around the 85 area, it's just a little too hot.
That certainly could bring some relief to the gas pump. Where do you think crude oil prices are going from here?
And frankly, I think by summertime, we should get down and probably see $70 to $75, at least in the USO. So there is a great ETF that trades USO. It follows the price of oil. You could buy it and sell it just like a stock. It's currently trading around $80 or so, $80.50. And what I'm looking at specifically is the July, and sorry, I'm looking at my notes, 84 put. It trades between $7.50 to $8. You can pay up to $8 for it if you want. And my target on this is 11. Now, again, it's a nice way to get in there. Like I said, pay $7.50, set your target at 11. That's a 40% return. And that option will easily get to 11 if the USO drops down to 72, 73, even 75 here in the near term.
Any final thoughts on trading oil?
Again, remember, OPEC Plus, I know they're in control. I know that they're limiting supply, but remember, these guys, they got to pay. That is the majority of their income for many of these countries. Russia's cuts, Russia doesn't really account for that much. And remember, the U.S. is pumping a heck of a lot of oil. So again, spotty on the demand side. It's been strong-ish, but there's been months where it's not. And then on the supply side, again, steady, which a lot of the summer driving season's baked in. So I'm looking for USO to drop down to 70 to 75 before the summer, but I'm buying myself a little extra time and correction on that option. I'm actually decided to go with the October 84 put. The October 84 put, buying it at 750, selling it at 11, a 40% potential gain. Again, remember, this is bearish on USO. I'm Jared Levy. Have a great day. We'll talk to you here soon. Thanks.
And thank you, Jared. Go to businessfirstam.com for where to see our show on TV.